Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic. Bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a quick reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. As always as well, thank you to everyone who supports this channel. Liking the video, subscribing, and commenting really does make a big difference, and we thank you everybody. With that said, let's break this down. Well, ladies and gentlemen, a major power just flipped the switch on XRP. In our opinion, this changes everything. Ladies and gentlemen, XRP takes center stage now. This is very serious. If you've been watching crypto and financial markets closely, today's story is a major turning point, as global power has just flipped the switch on XRP, and it could change how money moves around the world. Ladies and gentlemen, the New York Stock Exchange, yes, the NYSE, is upgrading its infrastructure to blockchain-based instant settlement systems. But the big question is, which technology will they choose? Will it be a stablecoin, a public ledger, Ethereum, Solana, or XRP? Let's dissect this. We're focusing on two U.S. compliant stablecoins, USDC and RLUSD. Both are heavily regulated, but RLUSD, issued through Ripple, sits under a tighter bank-grade regulatory framework in New York, and that could be the deciding factor for institutional adoption. Here's the suspense. This could be the beginning of a real-time tokenized global financial system, and XRP is in the mix. But first, let's understand why this is such a huge leap. Think back to the 1840s and the telegraph. Before its invention, financial messages took days. Markets moved slowly. The telegraph revolutionized finance by enabling instant communication. XRP is the modern telegraph for money, real-time settlement instead of waiting days. Let's talk about NYSE tokenization, the future of equity markets. The NYSE announced that they've developed the infrastructure for tokenized equity markets. This isn't just digital shares. This means 24/7 trading, instant settlement, fractional shares, and blockchain ledger entries. Let this sink in, ladies and gentlemen. I want you to imagine a retail trader in Tokyo. It's midnight, and they want to buy a fraction of Apple shares. 10 years ago, impossible. Today, tokenized markets make it seamless. This move reminds me of the NASDAQ modernization in the 1970s. Back then, paper tickers were replaced with electronic trading, drastically improving speed and efficiency. Tokenization is the next step, the industrial revolution for modern finance, standardizing and accelerating trade globally. Stablecoin battle, USDC versus RLUSD. Let's talk stablecoins, the backbone of instant blockchain settlement. USDC, widely used by RLUSD, is under one of the strictest regulatory frameworks in the U.S. It's issued through a New York Department Limited Purpose Trust Company, ladies and gentlemen, supervised by the NYDFS, a bank-grade, fully regulated trust. Think of RLUSD like a modern gold standard. Just as gold backed currency in the 19th and early 20th centuries, RLUSD provides stability, trust, and compliance, key for institutional adoption. Now imagine a bank deciding which stablecoin to integrate. One option is USDC, fast, multi-stated, licensed. The other is RLUSD, stricter, oversight, regulatory, seal of approval. The choice could determine which network handles trillions in instant settlements. Let's talk about Ripple's infrastructure, medical, custody, and institutional trust. Ripple isn't just about payments anymore. They've acquired Medico, a top-tier institutional custodian used by banks like BBVA and HSBC. Medico acts as a trust bridge, showing that if banks trust Ripple for custody, they can trust the same system for tokenized financial assets. I want you to imagine a Manhattan bank with billions in no-throw accounts, idle, earning zero yield. That money is like gold sitting in a Medici vault in Renaissance Florence, ladies and gentlemen. Valuable, but dormant. Ripple's infrastructure allows these funds to earn yield, settle instantly, and remain fully compliant. Ono partnership yield meets utility. Let's talk partnerships. Ripple and Ono could create a powerful synergy. Ono currently focuses on Ethereum, Solana, and Mantle. But integrating USDY with RLUSD on the XRP Ledger could be a game changer, folks. Think of this scenario. You hold RLUSD for payments, then swap to USDY for instant yield, directly on-chain. Banks with trillions in idle capital could generate 4 to 5% interest instantly, instead of leaving funds stagnant. It's analogy time. Everybody knows I love my analogies and historical references. I want you to think of SWIFT. It made cross-border transfers possible, but slow and costly. XRP plus RLUSD plus ONO is SWIFT 2.0, ladies and gentlemen. Instant, transparent, and scalable. Let's talk about XRP Ledger in action, settlement mechanics. Here's how it works. One party requests settlement in XRP, the other party is notified. Payment is sent to the designated ledger address. An oracle validates the payment. The obligation is instantly settled and finalized. This is the modern telegraph in action. Real-time, cross-border, fully verified settlement. Pilots are already live, and XRP is positioned as a primer option. Well, ladies and gentlemen, shall we begin, or shall we begin? I just got off the phone with one of my first large institutional clients that I've ever had. And I explained to them that in real time, we're watching finance split into two layers: value storage and value movement. And I explained gold is being reinserted quietly as a neutral collateral because bonds and fiat credibility are weakening to levels that we have never seen. And at the same time, institutions need faster, cheaper, politically neutral settlement rails. And that's where tokenization assets like XRP come in. Gold anchors value, I told him. XRP moves value. They don't compete. They complete the system, excuse me. Here's some updates for today's daily financial battlefield combat analysis. A bipartisan group of U.S. lawmakers have introduced a legislation to establish a $2.5 billion strategic resilience reserve for critical minerals, aiming to stabilize price, support domestic mining and refining, and reduce U.S. dependence on China-dominated supply chains. That's massive. I mean, that's like setting up a Federal Reserve type system to overlook all types of metals. We're also seeing decoupling from the dollar. India sells treasuries and buys golds. Their holdings have dropped to 5 years low. The reason for the fall is both needed because are strategic. The rupee has been depreciating, making it one of the worst performing Asian countries last year. The second reason is to strategically change the composition of foreign exchange reserves, reducing dependence on U.S. assets. In fact, most economies around the world are reducing resilience on the world's largest bond market. And for everyone, welcome to the Patreon, all new members, all new Wolfpack members in the membership channel, welcome. In the last video, we were talking about how India and the BRICS, they want to use stablecoins. They want to bypass a lot of things. So you can see that this is happening. Also, again, I always harp on this. You're seeing countries lock in place for a variety of mechanisms. We went over this in a further video. And if you're new, ladies and gentlemen, welcome to the Republic. Welcome to the Wolfpack. You're going to have to go back to other videos and see when I go off script and talk about these things. Tokenization is coming, but we're seeing metals stay in place. And it's a metals war. It's a commodity conflict, full blown. Okay? And as long as the commodities are hot, and they're going to stay hot for a long time, I don't see anything really slowing down, right? So you see it with gold, silver. You're seeing countries basically want to keep all precious metals inside their borders now for whatever new world financial regime order is trying to be put into place, if they can put something new in place, right? But again, the BRICS move to collateralize gold was the Pearl Harbor of attacking the U.S. Treasury dollar regime hegemon. I always go over that. I guess the thought on the street is the more precious metals you have domestically inside of a country, if they had to be confiscated or allocated for the national good, they're there at least, right? That's one way of thinking about this, right? But hey, the government and the powers that be would never force you to sell your assets at a losing price, right? Right, yeah. But you know what? Things are changing right now, and that's big. Again, just because people try to do this doesn't mean they're going to be successful. That's another thing. We're going to make a whole video about this as well, right? So you see all this happening in real time. We went over the platinum palladium exchange opening up in China. That was one of the pits I also learned a lot in. It was when I first started. But again, that's so denominated and overseas, and Russia's cornered the palladium market a long time ago, and we don't domestically produce this, so it wasn't really big, right? There's only been a few times that platinum has been less than gold, and that tells a whole nother chart for all you chart nerds that are here, which I love charting. But I chart not price action, I chart news stories and why, because that tells me everything I need to know. So how not to get caught up like sushi, ladies and gentlemen? Reading reports like a trader. When I read reports, I just don't read what's between the lines. I ask a bigger question. Why did they write this report at all? That's where the signal is. Let this sink in, okay? Every report is designed to make someone do something. Buy, sell, hedge. Some reports generally protect clients. Some are just flirting filters downstream. Learning to read the intent behind a report is how you get an edge, okay? And I'm very lucky that a lot of very, very powerful people in the commodity world teach me this because of my family from the New York Mercantile Exchange. Ladies and gentlemen, I want you to think of gold as a steamroller. Stackers or retail investors who pick up gold see a slow-moving steamroller coming, okay? They're picking up coins or metals early before anyone notices, okay? Macro traders, on the other hand, wait until the steamroller is almost on top of them, 6 inches away, and they keep buying anyway. Why? Because they have risk metrics, discipline, and timing on their side. They're not questioning, they're quantifying risk, and they're not guessing. When they jump in, it confirms the move, making it a lot more durable. Hence why we always say, if the momentum guys are not in yet, there's no top in place. Let's talk about macro narratives versus retail narratives. Ladies and gentlemen, macro traders don't start with intuition. They watch who's buying. They always watch who's buying. It's so important to see who's buying. It really, really is. They want to see why they're buying and whether it makes sense to continue. Then they rationalize it with a narrative. They tie it to fundamentals and add risk limits. This is what they always do. Okay, that's their game plan, clockwork. Okay, retail just sees the opportunity and acts. The macro traders are the professionals who can pick up coins and metals when the steamroller is nearly here, because they know how it survives if it crushes them, and they know how to survive this. Ladies and gentlemen, bank reports themselves are commodities. They exist to get you to do something. Sometimes it's genuine, protect the client, and make them money. Other times the report is filtered down. So by the time retail sees it, it's either late and weak or late and strong, like in gold or silver. That's why professional traders sometimes make 100% and exit, and then retail comes along and drives the next 200%. That's big. I want to talk about Japan's three-legged stool. Okay, you hear me always harping on Japan, the widowmaker, pay attention to Asia, Gucci clarity, Gucci discipline. Okay, and you're going to start getting this because the more I drill this into your head, 1 + 1 is 2, 1 + 1 is 2, you're going to begin to think about this and you're going to hear me recite this over and over and over again until you're reciting it. I want to talk about Japan's three-legged stool. Japan right now is like a three-legged stool. One leg is the bond market. Yields need to rise. One leg is the yen. It needs to weaken to help exports. The third leg is the economy. It needs to grow. If any leg fails, the stool wobbles. If yield rises too fast, the risk destabilizing companies. If the currency collapses too fast, consumers lose purchasing power. And if the economy falters, taxes and growth falter. So macro traders are watching all three legs always, because imbalance anywhere sends shockwaves globally. That's so important because, again, I'm going to touch on this again later in this rant, but you got to keep paying attention because as far as we're concerned, again, this is not financial advice. This is my professional opinion, not financial advice to anyone who retains any capacity. Japan is the compass of which we follow everything and spreads between Shanghai and CME. I also want to talk about, national pride under economic stress. When a country's under stress, say inflation's high, bonds are wobbling, and the currency's weak, leaders can't just people panic. They gin up nationalism to keep morale and spending alive. It's not fascism. It's maintaining the animal spirits of a population so the economy doesn't collapse under fear. History shows this consistently. Pride and economic narratives ride when macro pressure mounts. Always. Macro funds follow the flows. Macro desks don't see you picking up coins in front of the steamroller that we were talking about. They see the institutional clients doing it. They ask, why is Paul Tudor Jones buying this? Then they reverse engineer it, rationalize it, quantify the risk, and join the trade. That's why understanding what macro are doing is so important. Their late entry validates but doesn't exhaust the trade whatsoever, okay? I'm hitting you guys with a lot of stuff. You can rewind this and go back to this, but I'm going to tie this into how XRP fits into this emerging financial infrastructure right here, right now. And this is important. Again, I want to talk about value versus moment, the core distinction. Guys, modern finance is splitting into two layers, like I said. Store of value, collateral layer. Movement, settlement layer. Gold is being repositioned into the first layer. XRP is designed for the second layer. They're not competitors. They solve different problems. Looking back when I started on the floor of the Mercantile Exchange in Building 7, getting hit in the head with cards on the floor when they had the red carpet. Go watch Trading Places. I watched it again, and I have to reminisce of what it was like when 15 years old on the floor. Getting hit in the head with cards in the gold pit. And when I put down the Dungeons & Dragons book and stopped eating my tuna fish sandwiches, and like I said, the trader Lucky, you said pay attention to this, right? I guess everyone wanted my family's, good graces because of who they were in the actual Mercantile Exchange itself. But I learned so much, and, it's amazing. And why I harp on this right now, again, they're not competitors. They solve different problems. Again, speed of hand is going to be everything, right? And it's amazing to see this unfold, at least in my mind. And why tokenization matters and what isn't and what it isn't. Tokenization actually does. What this does, it represents real-world assets digitally, enables instant settlement, reduces counterparty risk and liquidity risk. It removes friction between jurisdictions. What it does not do, it does not create value. It does not replace collateral. It does not eliminate trust requirements. Here's the key points. Tokenization moves value faster. It does not define value. Where XRP sits in the stack, XRP's role is transnational, not ideological. Bridge assets between currencies, liquidity provisioning across corridors, atomic settlement without pre-funding, neutral, non-sovereign, non-political. Ladies and gentlemen, this is why banks look at XRP even if they never hold it long term. It's the plumbing. It's not policy. So why gold and XRP naturally coexist? Gold, a balance sheet defense, reserve credibility, neutral collateral, trust anchor. XRP, settlement, speed, liquidity, efficiency, cross-border interoperability, cost reduction. Let that sink in for a second, that list I just saved you. Together, gold anchors value, XRP moves value. That's the architecture. We probably should have had a different title for this video. But again, like I always say, the best part of the Italian ice is on the bottom. So if you made it to this point, I appreciate you. You're getting the candy. You're getting those nuggets. You're getting those nuggets. I would answer, my favorite flavor, was root beer or watermelon, depending on what the ice cream man, when he came around, had. Remember the ice cream man? That was great. Why central banks care but don't say it out loud? Okay. Central banks and institutions are facing three constraints, three big ones. Bonds are unstable. FX is political. This is so political. This is why this whole geoeconomic situation that we're in, has begun. FX is political now. Sanctions. Liquidity needs to move instantly, okay? They cannot say we're losing monetary credibility. So they say we're modernizing settlement. Don't you love that? Modernizing settlement. That's why our XRP-like systems enter. CBDCs versus XRP, important clarity. CBDCs, domestic control tools, surveillance heavy, slow to implement, politically sensitive. XRP, open rails, cross-border focus, neutral, already functioning, institutionally compatible. CBDCs don't replace XRP, ladies and gentlemen. They need bridges. So why is this happening now? Here's the cause and effect. Sanctions weaponize reserves. Neutral assets prefer gold. Fragmented world equals interoperability settlement, needed XRP. Bond volatility leads to collateral rethinking. Capital mobility leads to instant settlement demand. Again, this is not ideological, it's operational necessity. So my final takeaway from that little part of the rant, okay, and this is not hype, and it's non-promotional, gold will always equal credibility, always. XRP will always equal efficiency. Tokenization equals mechanism. CBDC is a control layer. Bonds equal in transition. This is how a fragmented digital post-trust financial system actually functions. So again, gold anchors value. Gold anchors value. XRP moves value. Remember this. 1, gold anchors value. 2, XRP moves value. Together, they complete the system. Bonds no longer hedge. Equities need rotation, and the new financial plumbing is already being built, quietly but structurally. So, when I think about all these stuff that I just gave you, the developments we've watched since last year, countries force in place their metal reserves through tariffs, export controls, incentives, a whole list of them. Now everyone's moving away from Treasury selling that because they want to hoard as much metal as they can. Because look, if Goldman is predicting 5,400, right, that's by the end of this year. And they've been spot on for the last 3-4 years. It's got plenty of room to probably grow. This is not financial advice whatsoever. This is just an opinion of mine. Okay. So if it's got room to grow and there's no top in place because momentum, people are coming in, they're buying metals now for a new financial world order. Think about this for a second. It's a new financial world order, and they're trying to grab as much as they can before it is so expensive. So you're seeing all these metals outbid the little guy, the retail guy, outbid it. Now with XRP, look, we just spoke about how macro people trade, right? That's so important. If you got to rewind this, go back and rewind this because I'm framing this for you. Why, when you look at the prices, and I look at XRP broke $1.90 and it's dropping right now, okay? At the time of this recording. Institutions acquire things, and when macro players start acquiring things, they have a whole list of the reasons of why, okay? We're seeing XRP. We're seeing most, and HBAR as well, that have an ETF being acquired right now. Once you have the ETF structure in place, these are being acquired. They're being taken out of the public's hands and into the control of institutions. That's what we're seeing right now with metals. Because no matter what you see, the world is becoming into two camps with control. It's about financial control now, right? So how not to get caught up like sushi, don't run after anything right now. We went to other videos. And why I said we went to other videos, because I'm jumping back in time to the videos we made to this point, because each video that we make, again, I'm a news person. I love the news. They're building on last videos. So if you're brand new here, you're going to have to go back. You have a lot of catching up to do because I just don't summarize everything. I don't have the time for it. The world is going to continue to move, like we said, into a NAFTA type way for economic, financial regime hegemon structures, right? Try saying that 2 times fast. Gold, the BRICS unit, east side of the tranche. The west side of the tranche, debt, leverage, tokenization. Ladies and gentlemen, India and Brazil are ahead with the tokenization. They're ahead of everybody, okay? You've got some big players talking about things right now. Being a financial mercenary, which I love, I only care about my results and delivering alpha in return. That is the purpose of why we exist in this space, okay? Don't exist in this space for anything else but to derive alpha to my benefactors in any shape or the way, okay? I don't care who's right or wrong. I use everything I've learned and everything I understand about the world. See, having lived around the world in different places, I understand the world. I understand culture. That's why I never throw mud on anybody, okay? The things I'm saying, if you would actually write this down, it tells a whole reason of why. And some of the videos on our Patreon, I'm going to go into the background for the people who I clerked for, who are former, COMEX governors who taught me everything and they're no longer with us, but I learned everything. And I'm so proud to share it with everyone because they believed in sharing. They believed in education, right? For those who wanted to learn it. And if you found it and you knocked on the right door and you waited to enter, you can learn a lot. I don't care what happens. I don't care if one system outlives the other because I'm going to play both sides against the middle. I'm going to engage in both developments. Why would you not? That's like, remember we spoke about how 70% of all silver is recovered by mining for copper and other resources and other metals. I don't need to go through this all the time, but it's recovered that way. So that's why if copper mines, which no one was investing in for most of the last decade, and now there's a rush for it, why they're going up. But my point being is metals plus CBDCs equals a multipolar financial infrastructure. The BRICS system is quietly building the plumbing for cross-border settlement. I just went over this and why. Dollar dominance challenged indirectly. These developments don't shout de-dollarization. You see it happening every day, okay? So again, what I took from Davos, I saw what was said on the West side that globalism is over, and the East side says the dollar era is over. Here's the conflict. A mercenary goes to the highest bidder, his tradecraft. My tradecraft, deliver alpha, whoever retains myself in our organization, any capacity. That's both sides. That's like saying, I have a concession. I'm only going to look for one metal. I'm not going to, the other metals, I'm not going to do anything with. We used to do so well on concessions when we developed it. Whatever we were mining for and went out in certain types of literature and share registers for people, we would take that and sell that, and any other feedstock that we found, if that was not in our perspectives and our roadshows that we were going to basically derive what you get per share, we kept for ourselves. No one cared back then. It's like when everyone was talking about scrap metal, nobody cared. Now everybody wants every single piece they can get their hands on. I get it. My point being is, if you're here with us, we've been financially overrun. There's nowhere to fall back to. And why I say there's nowhere to fall back to, our money value is being eroded. We're seeing other assets explode in value, right? Explode in value higher. That's a big deal. That's a very, very big deal. Okay. So again, there's no top in place, right? Clarity bill's got to get passed as far as we're concerned. And we're moving to a system. If there are people, and I'm not mentioning names, who want control over certain things and need to have control over things, I'm not going to answer this rhetorical question. What crypto allows people to have control over things? Answer that question, and you're very, very far along the way with this, right? But again, you got companies like Samsung going out and going to mines, actual concession owners and miners and JV miners, everyone, wildcatters, everyone, asking to have offtake agreements. Any concession that we ever developed, even the one still, we have offtake agreements with the same people for the last 2 decades. They call us up on speed dial. They want everything that we can give them out of the ground. Except in certain places, it's harder to have ASM, artisan scale miners, digging because they're going to dig when they need to dig. They're not. It's different than shaft mining. Okay, open pit. It's just different. Why I go over all this? Because everything's changing. Remember, we spoke about Iran buying $500 million of Tether. If U.S. stablecoins are so bad, why they buy $500 million of Tether? Because they trust it, because the United States, they trust that over their own situation. There's so many things happening right now to be excited for. Financially, I wish and love to see if I could see how this will be writing about in 100 years from now. I do. And if you made it to this part in the video, I appreciate you. Because again, you have to have Gucci clarity. You have to have the conviction. Make sure your trade sizes, if you're going to go and trade, they're small enough not to get cut up like sushi. Keep the conviction. Keep your recce plan strong. Understand why you're doing this, because there's going to be a lot of chaos going ahead, because markets can be moved now by news, and sometimes they're moved by news on purpose. We're going to talk on more geoeconomic in another video, geoeconomic. I want to talk about market impact, why the numbers matter. The NYSE lists roughly 2,800 companies with a domestic market cap of $32 trillion. The entire U.S. market is $62 trillion. Tokenization, even a fraction, could unlock hundreds of billions in instant liquidity. Combine this with global retail participation and algorithmic trading, and turnover could increase 20 to 50% over the next few years. Think of a retail trader in Brazil or Germany can now trade fractional shares at any hour, settling instantly, just like major institutions. This is like the dot-com boom, but with real infrastructure and compliance baked in, not just hype. I want to talk about Ripple's global strategy, licensing, ETFs, and adoptions. Ripple's growth is staggering. July 2025, UAE tokenization. August 2025, SEC case concluded. September 2025, RLUSD, partnership with major banks. October 2025, acquisition of G Treasury. December 2025 to January 2026, FCA and EMI licenses, 500 million institutional investment. Ripple is fully licensed in 75 plus jurisdictions, operating in 90% of the FX market, which moves 7.5 trillion daily. Think Bretton Woods settling the global financial standard. Ripple and RLUSD could redefine global digital asset compliance. XRP as a game changer, why this matters. Ladies and gentlemen, for institutions, trillions of dollars in idle capital can now earn yield instantly. Payments are faster, cheaper, and fully compliant. Think of a bank treasury that previously earned zero interest on cross-border funds can now sweep idle capital into XRP-based yield instruments, unlocking billions in efficiency overnight. Just like the Industrial Revolution standardized supply chains and accelerated trade, tokenized finance is standardizing money flow and global liquidity. Here's the conclusion. The new era of tokenized finance, ladies and gentlemen, it's not speculation. Every move, Ripple, RLUSD, Medico, Ono, is strategically aligned to bring real-world assets on-chain, create institutional yield, modernize global financial infrastructure. XRP sits at the center, optional, powering instant settlement globally, liquidity and compliance. If you found value here, like, comment, and share. Ladies and gentlemen, understanding these developments now could make all the difference in the next phase of financial evolution. Tokenized finance is here. XRP is at the heart of it. The era of real-time global settlement is no longer a dream. It's happening now. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Thank you for watching. I'll see you in the next one. Your support allows me to keep bringing these deep dive, high-value insights to the crypto community. I'll see you in the next video. Have a great day. Always stay emotionless with that Gucci clarity. Watch XRP closely. This could be a defining moment. This content, again, is for informational entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. The game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves it'll never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally, because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the real world is distracting with noise while XRP continues developing behind the scenes and building momentum in broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes, smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Love you all.